All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour, and some interesting stuff going on, and some interesting distributions in terms of the way some of the money's moving. But let's start with the challenge. Challenge, we have a position here on Pepsi. Pepsi up just about, 90 cents here. So let me pull it up here. Pepsi, we'll get the options value filled in. 294 is the mark there. 294. Yeah, climbing up a little bit here. We're stock price is still short of our price target. We're looking at a stock price right now of 137.84. 137.84, and we're looking for 139.31 to come in. So we're about $1.50 away there from that. The price target is looking for a breakout to come into play on Pepsi. We do have a higher low in play, so there is a nice chance for that, for that breakout to happen. But we'll see what ultimately transpires here with that. So, continuing to run with Pepsi. As far as new signals on the board, there's nothing this morning. The scan results are very light as well in terms of just the crossovers. You can see there's not a single bullish crossover today, or at least this morning. And then on the bearish side, I believe we have Ford and Bank of America. Valero just joined the list, but Bank of America, Ford, Valero, and none of they're not even close to triggering. This is Ford. It's the consolidation risk simply too high. Bank of America, they just had their earnings here this morning. We'll talk a little bit about those. And then Valero here, which, had this really nice upward tick. And, you probably recall me saying I was a little disappointed that we didn't see a bullish challenge signal come in on it. But we've had a sharp 3 down days on it. Would be really nice to see it try to turn around and go, but give us a bullish signal and go. But we'll see, how that decides to play on out here today. Now, this morning we saw the market open up and essentially just go straight up. And straight up to the tune of about 16 points from where it opened up. And that's that's pretty big. It's not ginormous, but it's sizable. But then if you look over here at my watch list, just this little one over here on the left-hand side, you'll see there's a lot of stocks that are in the red, right? Market's up about 10 points on the S&P, but there are a lot of stocks in the red. If you look at the advancers versus decliners ratio, we're only looking at about 700 more advancers, 650 more advancers than decliners in the market today. So we're not talking about a massive everything go up type up day, which we typically aren't. In this rally that has been of late, we have not seen these days where just everything goes. It's been highly differential, between sectors and between stocks. Now, one of the reasons why we are seeing the market carried on higher is because of UNH. Now, UNH reported earnings, and you can see they're up about almost 3% here. Is one where they beat pretty handily on earnings, but did miss on revenues. But UNH there. But then you take a look at Bank of America. It's dragging on down and helping to take some of the banks with it. J.P. Morgan losing a little bit of its luster from yesterday. So it's one of those where you go, well, all right, what's really kind of driving things here today? And if we just go and we look at a sector summary, we can see utilities are on top, healthcare, and consumer staples. These are the three most conservative sectors in the market. And typically, when sector analysts look and they see this distribution, they go, ooh, that's pretty bearish. We have technology, consumer discretionary, financial, energy on the bottom. and we have the three kind of safety sectors here on top, and that's what we're seeing today. So it's almost like a rotation into safety type rally here this morning, which we have not seen very much of late. Now the healthcare move is not a rotation into into safety there. That's a UNH thing helping to drive it. Now, take a look at this chart right here. This kind of pie graph here. This shows the sector weightings in the S&P 500. And, 15 years ago, this was very different. But, as time goes by, it gets a little more skewed year after year. And technology is 21% of the S&P. Healthcare is 14%. Financials, 13%. So if we're looking at a day where healthcare is leading the way, right? It's leading the way here. Chances are we're going to see the market skewed a little bit extra to the upside, right? Technology is still green today, hasn't gone red. So, we're going to see a little skew to the upside there. You see consumer staples, utilities, energy, and energy's been a big laggard, but it just doesn't have that much weight. Materials just no longer has that weight in the S&P 500. So we could see a big materials rally and the market would hardly move, right? Where we see a big healthcare rally or a big technology drop, we're going to see the index move. And, these weightings here, they change. They change day to day, month to month. This, I believe, is the weightings as of middle last year, so about 6 months old. And, the weightings are generally about the same, probably a percent here and there, a little higher on technology, just slightly lower on healthcare, and a little higher on financials right now. But that's what we're seeing here. Today we're seeing the weight of healthcare, the weight of technology, come into play with the index, and with those trading in the green, we are going to see the bump, even though financials and consumer names are generally lower here this morning. Okay. Now, yesterday I mentioned that Target had a chance to trigger on a 3-7 cross, and we didn't get a 3-7 cross on it. And down pretty strong here today as they announced their holiday sales. It's a pretty big gap, and it creates an island reversal type action here, where you get this gap up, right? And you get everybody kind of up here, in it. Now you have a gap down, and essentially you kind of abandon all the buyers that are up there. And, traditionally in this type of pattern, you are going to see a bleed back down. And that's what I would expect that we will see from Target after those sales numbers were reported. And, we can see it weighing on stocks like a Walmart. But if you'll notice Walmart's seeing money come into it today. We saw it yesterday where Walmart gapped down, saw money come in. Today it gapped down, saw money come in. I started watching Walmart right back here as it pushed above the high from the prior day last week. But it has not been able to hold on. It's pushed into new lows, so I'm looking for that to happen again. Does it break the high of the prior day? And so far, we have not seen that. But if you're like me and you're looking for an opportunity to get into Walmart, that's what you're looking for there. All right, so that's a little bit of the market, here this morning, and going to continue to run with Pepsi and see what continues to trigger here. As the day progresses, there are a few things that could trigger this afternoon, if they were to move a little bit and create the crossover action, but there just simply are not very many crossovers out there on the board this morning. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.